Hi, it's Paul from Hurricane Forex. I'm going to go through the Hurricane Forex trading system again because I've got quite a few trades on this morning. So I'm going to start off by evaluating trades and showing you where we go with them, because there are quite a lot of signals, and so I have got quite a lot of trades running. So first thing we're going to look at is when you get a signal. So when you get a signal, an arrow will appear and you'll get a message coming up saying that there's a signal. That doesn't mean that you take the trade, obviously. No, it doesn't, because you've got to look at the market and what the market's doing. So for instance, let's take in this case, let's go for a window. We'll start with dollar Swiss. So here's a trade on dollar Swiss that I've just put on. It's been stagnant for ages. So what am I looking for? I'm looking for, firstly, I like to trade bearish where these gold lines are above the price. That's the daily parabolic SAR, in fact. So you can sometimes see it change in the middle of the day. It will change to a bearish parabolic SAR. So then I trade off of the hourly chart for my signals, but then I look on the 4 hourly chart just to make sure everything matches. You can see big bearish trend. So you can see how the white line has gone below the blue line on the daily chart. We're looking at the hourly chart, so this gives me my setup. So for my trade setup, the way I do it is like this. I target the second fib level away from the entry, and then I put a trailing stop in for roughly the distance to the first one. So let's look at this. So here's my entry here, and I've got a 67 pip trailing stop. So if I go to my trades, you'll find that I've got, this is the one I'm on now. I go to trailing stop, custom, and I've got it at 50. Let's put it at 60 pips. Okay, so that gives it enough space that if it pulls back, then it's gonna it's fine. Okay, so we've got that 60 pip trailing stop. So let's look at this Euro Aussie trade we're looking at the moment. If I'll just close that so we can get a good picture of the chart. Euro Aussie, you can see we're already at the 38.2%. The trailing stop has been activated because I set it to 30 pips, because it was about 39 pips or something like that. Let's see, measure the distance from there to there. 38 pips. So let's look at that one. That's an Aussie Yen trade alert for a sell. So go to window, let's find Aussie Yen quickly. There's a lot of signals around today, it's quite unusual, but we had a major move on the dollar the other day. Let's just quickly open that. So here's an Aussie Yen signal. I like this break. There's a big move down, a pull back halfway, and then we're into a sell. Let's put the trade on. So trading new order. I'll show you how I set it up. I'm going to sell it. Okay, and then my first target is not the 11.8. My target's the 0%, all the way back down there. My stop loss is going to be above the high there. Okay, so my risk reward is correct. Now let's measure. Use the cross. Measure the distance between there and there. That's 52 pips, so I want a 50 pip trailing stop on that one. Doesn't have to be exact. So I right click the order, trailing stop, custom, 500. So that's 50 pips. So it's 500 points is 50 pips. Okay, it's not always true. It depends on the market you're in. And there we go. So you see I've got a lot of trades that haven't been on long. So that's in there. Okay, what's also going on here is there's a clean break. You can see how this pulls up, and then there's a clean break across this sort of area here. It looks like a duck. It looks like a bit of a duck. These are actually Heikin-Ashi lines. So when you see that blue line, that's a Heikin-Ashi sell on the daily, and that's following that. So if we get crossing across, you see that we're moving into a sell. So that's why that is in a sell. This is moving into a sell, because you can see the white line is coming closer to the blue line. And then we use the fib levels for our structure. Okay, so is it likely to get back to that level? Let's go back and look at the daily chart. So you can see where it does bounce around. So it's in an uptrend, but there's a big W there, and it has pulled back, but it needs to go further back down. So I'm quite happy with that target on the 38.2% on the daily. You see that they're, so there we go, and I've got the same thing. There's that signal coming again in a sell. That's the 4 hour. The 4 hour's got a buy signal in it. Ignore that, take it off the hourly. There you go, there's the sell. You might go, why has the 4 hour got a buy signal? It's just because of the way that the maths has calculated, so it doesn't kind of switch itself off. But I always use the hourly chart because it gets you more in. And also the other thing I found about the hourly chart is if you get a sudden move because of news, we got some news at 12 today. For sterling, if you get a big move because of news, you get in quickly. The other day I got into a US dollar trade, which went very, very well, because when the what's it called? So here it is. So there you go. There's a signal. You see that signal won't hit until it actually gets quite a way into that bar. So that means that you're not going to enter too soon. So if you've got news coming, best things to get out of things and to trade off of the news. Just wait. Don't take. Don't try and buy the dollar. I tell you one thing as well is that when the news is coming, expect the markets to go the opposite direction to the way the news is going to go, and expect your spread to fly up. So if you've got a tight stop on it, you're going to stop out even if you're right about it. So that's a bit of Hurricane Forex for you. You can get hold of this indicator just by going to hurricaneforex.com, and there's a link on the front page to MQL5. It's MetaTrader 4 it runs on at the moment. I might do a trading view version actually, but obviously it is quite a lot of work. This is one I'm interested in, sterling dollar, but I'm not taking it yet because it looks like it's got a bit of a pennant going on, but I might be wrong. And look how it ties up with the lines as well. It came down here, broke through, did 2 fib levels in about 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. It then pulled back halfway, which we expect, exactly to this bearish line. It bounced off it as if it was there to stop it. In fact, it tried to make it to this 200 period Heikin-Ashi, and then there's the 100 period Heikin-Ashi. It hit that first one. You can't normally draw these on the chart, they're not there, so this is something I've kind of invented by mixing Heikin-Ashi and moving averages. So it bounces off there and it just doesn't make it, and it goes back down to here, bounces off the 38.2%, and now it's kind of stuck in the middle. So I don't know where it's going. I think it's going to pull up to here and then pull down. But I'm holding on, I'm waiting, because there's GBP news at 12 midday, so I don't really want to take too much on the GBP, and I'll show you exactly why. I have got a GBP trade sitting there. There's 30 pips the wrong way. Let's go GBP New Zealand. That came off of a trade, a stock, a signal. Sorry, not a stock. You can do this as well by hitting G. There it was. Activate. Okay, always does that. It's because I'm running on Linux. It doesn't. So here's GBP New Zealand. Now you see I had a buy on that candle. I've got my stop in place. It's going to probably stop out. It's just turned around very, very fast, even though there was a buy signal. But my stop's in place, and it's below this 100 period line. If I want to make my stop really certain, I can put some more barriers between me and it. So the price has got to now break below that 100 period moving average Heikin-Ashi, and it's got to break through this fib level. So if it doesn't do that, which it probably won't, then, and remember what I said about it pulling against it, I'm just going to hang in this trade, and it's going to cost me $400 if it goes wrong, and $850 if it goes right. So it's 2 to 1 ratio, so I can kind of afford to do that. One of the things I struggle with is not messing with the trade. So once I've got my trade set up, you stay in them. If your risk reward's right, you should overall make a profit. So that's that. Hurricaneforex.com. That's where you get your trades from, and hopefully that will really help. Another thing I want to mention is forexsignals.com. If there's a link from hurricaneforex.com, or if you want to ask me about that, you can try a 7-day free demo, but they have lots of really exciting stuff going on, including prop trading trial that you can try out, and it's really good to try this with it because it actually works. Okay, so thanks very much. It's Paul here from hurricaneforex.com. So just go there and you can get started.